Hello friends, in this lecture we'll be doing the practical problems on what we have discussed so far. Interest on drawings, interest on capital, partners loan, remuneration, profits, P&L appropriation account. So we'll be doing practical problems on those. Let us see the first problem. It says X and Y are partners sharing profits and losses in the ratio of 2:3 with a capital of 2 lakh and 1 lakh respectively. Okay, so let us write down the facts. So there are two partners, X and Y, sharing profits in the ratio of 2:3. They have capitals of 2 lakh and 1 lakh. 2 lakh and 1 lakh. Clear? It says, so show the distribution of profits or losses for the year ended 31st March 2016 by preparing the relevant accounts in each alternative cases. Let's see the cases. Case 1 says, if partnership deed is silent as to the interest on capital and the profit for the year is 20,000. So basically we have to prepare the profit and loss appropriation account. Let us first see case 1. P&L appropriation account. Friends, please follow the formats. I'm doing it without formats, but in the examination you have to follow the formats. Okay. Debit side. Now what it says, case 1, we have profits. We'll say by profit and loss account 20,000. Okay. Next, it says partnership deed is silent as to interest on capital. Now what will be the treatment? If the partnership deed is silent as to interest on capital, then the provisions of Indian Partnership Act 1932 will apply, and the provision states that no interest on capital is to be paid. So this profit will be distributed as such. We'll say to profits transferred to X and Y. 20,000 in the ratio of 2:3. Clear? So this will be 8,000 and 12,000. Clear? So this completes our case 1. Because the partnership deed is silent as to interest on capital, the provisions of Indian Partnership Act 1932 will apply, which states that no interest on capital is to be paid. Let's see the second case now. Second case says, if the partnership deed provides for interest on capital at the rate of 6% per annum. Now the deed is saying that you have to pay interest on capital at the rate of 6% per annum. And loss for the year is 15,000. There is a loss. Now I have told you that profit and loss appropriation account is prepared only when there is a profit. Clear? So we will not be preparing the profit and loss appropriation account. Instead, what we will do is we will prepare profit and loss account, and because this is a loss, the interest on capital will not be provided, because it is not a charge here, it is an appropriation. In case of an appropriation, interest on capital is provided only when there are profits. Here in case of loss, no interest on capital will be given. Clear? So let's say case 2. In case 2, we will not prepare profit and loss appropriation account. We will prepare profit and loss account. Clear? So what we have in the profit and loss account now, we have a loss of 15,000. So we'll write here to loss 15,000. No interest on capital is to be paid. Clear? So this loss will be directly transferred to partner's capital account. Clear? In the profit and loss account only, you will say by loss transferred to X and Y in the ratio of 2:3. Clear? So this will come to 6,000 and Y 9,000. 15,000. Now what you have to do in this case, here you must give a note. You must give a note that in case of loss, in case of a loss, will prepare profit and loss account and not profit and loss appropriation account. Second, interest on capital, interest on capital will not be given, in case of loss, in case of loss. Why? Because it is an appropriation and not a charge. Clear? You must write down these notes in this case. Clear? You can write this down. We'll prepare the profit and loss account and not profit and loss appropriation account. Be careful with the formats. Okay. Notes: in case of a loss, we'll prepare profit and loss account and not the profit and loss appropriation account. Second, interest on capital will not be given in case of loss because it is an appropriation and not a charge. Clear? So let us see the third case now. What is the third case? If the partnership deed provides for interest on capital at the rate of 6% per annum and the trading profit for the year is 21,000. This is a simple case. Okay, we have a profit and let us see case 3. The partnership deed provides for interest on capital at the rate of 6% and we have the profits. So we'll say profit and loss appropriation account. Right. Now it says we have a profit of 21,000 by profit and loss account. We have 21,000. Clear? 21,000. It says interest on capital is to be paid at the rate of 6%. So we'll pay interest to interest on capital for X. Capital is 2 lakh into 6%. This comes to 12,000. For Y, it is 1 lakh into 6%. This comes to 6,000. So the total is 18,000. So what is the profit left with us? Just 3,000. What is the profit now? Profit left is 21,000 minus 18,000. Clear? So to profit, transfer to X capital account and Y capital account. The total profit left is 3,000. 3,000 will be divided in the ratio of 2:3. This will come to 1,200 and 1,800. So total we have 21,000. So this was a simple case where the partnership deed provides for interest on capital and we have the profits. Clear? You can write this down. Then we'll move on to the next problem. Clear? Let's move on. Let's see the next problem now. Next problem reads, A and B contribute 40,000 and 20,000 respectively by the way of capital on which they agree to pay interest at the rate of 6% per annum. What it says, two partners A and B we have two partners A and B. What is the capitals? Capitals are 40,000 and 20,000. Capitals are 40,000 and 20,000 and the interest on capital is decided to be at the rate of 6%. Clear? Now, their respective share of profit is 2:3 and the business profit before this interest for the year is 3,000. What is the profit sharing ratio? 2:3. Profit sharing ratio is 2:3. And what are the profits for the year? Profits are 3,000. Clear? Now, the case 1 is if the partnership deed is silent about the treatment of interest on capital. Now see, read carefully. It says partnership deed is silent about the treatment of interest on capital. It is not silent about interest on capital. It is given in the deed that interest on capital is to be paid at the rate of 6%. But the deed is silent whether this interest on capital is an appropriation or a charge. Be careful with this. Do not ignore interest on capital. Interest on capital is given in the deed, but how it is to be treated is silent, that it is to be treated as an appropriation or a charge. I have told you in the last lecture that if the partnership deed is silent as to the treatment of interest on capital, then we will assume it as appropriation. Clear? So let's see. So that means in the first case we'll be preparing the profit and loss appropriation account. Profit and loss appropriation account. Here credit side, debit side. So what is the profit we have? By profit and loss account, we have a profit of 3000. And what is the interest on capital? To interest on capital for A, it is a capital of, what is the capital of A? 40,000, 6%. 40,000 into 6%. Clear? So 2400. And for B it is 20,000 into 6%, that comes to 1200. Now the situation is difficult because the interest on capital comes to 3600, but the profits are 3000. Now what to do? Difficult situation for the firm. What to do now? A is to be paid 2400, B is to be paid 1200. In total they are to be paid 3600, but we have the profits of only 3000. Now we will divide this profit of 3000 in the ratio of interest on capital. Clear? We'll prepare the working note here. I'll say working note number 1. Ratio of interest on capital. Ratio of interest on capital. So what is A's and B? A's interest on capital is 2400 and B's interest on capital is 1200. So what is the ratio between them now? 2:1. So we will divide this profit of 3000 in the ratio of 2:1. So what will be the interest on capital? It will be 2000 and not 1200. It will be 1000 now, and the total will be 3000. Clear? We have insufficient profits to be distributed as interest on capital, then the available profits will be distributed in the ratio of interest on capital. Whatever the interest on capital is, get the ratio out of it and distribute the actual profits, whatever profits we are having, in that ratio. Clear? You have to prepare this working capital working note also. Now let's see the second part of the question. It says if interest is a charge as per partnership deed. Now partnership deed is providing that the interest that is to be provided is a charge. That means it has to be paid whether there are profits or the losses. And in case of a charge, we will prepare profit and loss account and not profit and loss appropriation account. Be careful with this. Profit and loss appropriation account will be prepared only when there are profits and the item is not a charge but an appropriation. If it is a charge, then profit and loss account will be prepared. Clear? Now, what is the profit? I'll say by trading profit, what is the profit? 3000. Now, interest on capital is to be paid. It is a charge to interest on capital. Now, I will not distribute this profit in the ratio. We'll pay them the whole interest on capital, because now we are paying it as a charge, that whether there are profits or losses, we have to pay them the full. So for A it will be 2400 and for B it will be 1200, so the total is 3600. So we have a loss of 600. By loss transferred to A and B, so the total loss is 600. For A it is 240 and for B it is 360. So the total we have is 3600. Clear? Why we are not appropriating in this case? Because interest on capital in this case is a charge against profit and not an appropriation. When it is a charge, we have to pay them the full amount, irrespective of we are earning the profits or we are into losses. So we'll pay them the full interest on capital, and the remaining loss will be transferred to the partner's capital account. Okay, I'll say A's capital account and B's capital account. Clear? So this was the case 1, insufficient funds. Case 2, treatment as a charge. Clear? So you can write this down. We have discussed 2 problems today on interest on capital basically. So you can write this down.